right. Happy Friday, Mill and Head. Big story today, big story around the world is European banks. What is going on that continent? It's just been a total circus all year, starting with the energy markets. You know, we've long theorized on this channel that whenever it starts, whatever it is, that there's a really good chance it starts in Europe's bank. For the last couple of years, we've kind of been wondering, is it going to be China with the real estate collapse? Is it going to be the Fed tightening, or is it going to be the European banks? And right now, I would say like the 90% favorite has got to be Europe's banks. And there was a lot of things that we saw over the last couple of days. Really, a lot of stuff just came out today that makes me think, wow, this could be starting really, really soon. We came really close on September 28th with the UK pension crisis when they were just hours away from insolvent pension funds. And they've announced this extraordinary special intervention, not QE, whatever you want to call it, what the Bank of England did. They printed money and bought bonds to save their pension funds. That ends today. It's over. They bought 19 billion pounds, 19.3 billion pounds worth of bonds today, and that's it. And we'll see if that's enough. We'll see if the time that the BOE gave the UK's pensions could save them, because if you look at what the yields on the UK gilts are right now, they're pretty much right back where they started. I'm not sure they pulled it off. And even if they did, we've got this whole mess in Switzerland that hasn't gone away. Credit Suisse. Remember, everybody was talking about how Credit Suisse was on the brink of failure a couple of weeks ago? Well, that kind of dropped out of the headlines. Well, today it's back. It made a couple of headlines. It was making headlines like minute to minute not too long ago, where the CEO came out, reassured everybody everything was fine. And then a few minutes later, what the heck? 5 minutes ago, he said everything was fine. Now what is he doing? And then 2 minutes later, something else. So who knows, folks? By the end of this stream, maybe Credit Suisse blows up. I don't know. That would certainly expedite the weekend, wouldn't it? That would be one. Oh, my God. What is going on in that continent? And, of course, we have these imbeciles from Just Stop Oil throwing SpaghettiOs on a 1,000-year-old work of art. Nothing wrong with a little bit of cultural sabotage to ring in the weekend and to get your climate goals advanced, right? Nothing says, I hate my father, like dyeing your hair pink and destroying a masterpiece just to get 15 minutes of attention, right? Oh, man, what is going on the continent of Europe? My European friends, I love you guys. Thank you guys for watching the channel and for everything you do. I pray for you guys all the time. I don't know what is going on in that part of the world. And look, we're not much better here. Something came out of the U.S. Treasury today. They're going to borrow money so they can buy back their own bonds, which is really just how they borrow money. So they're going to borrow money to buy back borrowed money. I don't know. When, like I just put out a short a few minutes ago, when you put a central banker in charge of your Treasury, you end up with a central banker in charge of your Treasury. And then don't ask questions when they act like central bankers. So I can't say we're much better here. And then China, who knows? I mean, if any information gets out of China, well, it's usually not good, and that's whatever makes it through the censors. So we have a three-way race to see who can muck up their own economy the worst. And right now, Europe is out to a big lead, but the U.S. and China are nipping at their heels. So I think it's time we say hi to Mish. Let's bring in my man, Mish the Mod, and look at what's going on in markets. Mish, how are we doing today, sir?
I am doing great. Looks like I'll be here for this one, and then I'm going to move on. And we might actually have someone that's going to get the Mercury dime.
Oh, really? Really? Does it have something to do with Bucky's corn nuggets?
It does.
All right. Well, give my regards to. Do we say his name? No, we won't say his name. But you know what? Do me a favor. Record a little bit of video or something with him. Send me something. We gotta. If somebody finally catches up with Mish, we have to capture the the exchange. It will be a first. Anyways, before we go through a couple of the indexes and everything, you guys are just going nuts here with the super chats. So let's say hi to a couple of these guys here. And oh my God, this is the most wonderfully Star Wars handle I have seen. Where is it? Sorry, StreamYard is giving me trouble. We'll go one at a time. We are going to start with my man, AK. Thank you, AK, very much for the super chat. Appreciate that very much. He says, what can you say about yesterday? Well, fun fact, 13 October 2008, Same day, it went up 10%, and the next day was red. Funny you should mention that, AK. That's very similar to what happened yesterday, 13 October. Didn't go up 10%. It was something like a 5% intraday swing, not quite as big. And then look at, hey, here we go, right on screen. S&P 500 down 80 points today. So you're right. That's very interesting. I didn't realize 13 October 2008, not exactly the kind of day you want to be comparing markets to. But, wow, that is a very thought-provoking connection you just made there, AK. Thank you very much, sir. I appreciate the super chat and the support of the channel. And indeed, what can we say? And there is my man Zarkos, says to help you be in a good mood. Well, thank you, Zarkos. I'm actually in kind of a surprisingly good mood, considering, like, seems like economically speaking, the world around me is on fire right now. And I'm just, whistling past the graveyard, if you will, as this goes on. I don't know.
The roof is on fire.
We don't need no water. Let it burn. Oh, man, I am going to get my channel flagged today. I am way too giddy considering everything that's going on. But look, folks, if you can't laugh about it, what can you do, right? I mean, look, the boat's sinking. You might as well tell a joke, right? We're all going to get wet anyway, so it's going to happen either way. You might as well be able to laugh. Might as well learn a little bit, understand what's going on, and call me old-fashioned, but I'd like to think if we study history and some of the mistakes we've made in the past, maybe we won't make them again. Just ideas I throw out there. You guys do what you want with them. But Zarkos, thank you very much, sir. I am in a good mood. Thank you. I appreciate the support of the channel, sir. And, hey, your shorts should be in slightly better shape today than they were yesterday. And, man, Ewok jerky. Talk about a guy, a Star Wars guy, huh? Ewok jerky. I've never had it. I'm sure it tastes like chicken. But he says, love your work. Thank you, Ewok jerky. I can't say that name with a straight face. Thank you, Ewok jerky, very much for your support of the channel. I appreciate it very much. And thank you for the kind words. Very much, sir. And where is he? I see the King of Money. Hello, Your Majesty, from Dumb Money Media. Thank you, sir, for your super chat, supporting the channel. He says, hope you had a chance to watch Nobel Prize Ben. Can you believe that? Ben Bernanke getting the Nobel Prize. It's a toss-up between Yellen and Powell. Who's going to get the next one? I don't know. How do you pick a winner with such great options available to you? I just don't know, Your Majesty. But he says, I made it during class last night. Well, why not? Why not spend some time making a video about Ben Bernanke getting the Nobel Prize instead of studying while you're there? God knows I wasn't the best student in the world. Let's just put it that way. When I was in college, I made it through barely in enough time to technically have earned a PhD while I was there, but I did make it through. So yeah, I know about goofing off in class more than my parents probably would have enjoyed, but let's see. He says, also in my Discord. Okay, I'm going to have to take it out. I'm getting a lot of messages about Discord, man. Guys, I swear I do make it there every now and then. Thank you, everybody who chimes in on the Discord and who sends links and stuff. It does make it through to the channel. Mish is watching that thing all the time, and I get forwarded the links all the time. And I got a message from somebody else today asking if I was in the Discord. I think it was Jose. Was it Jose Orozco sent me that message? Somebody else sent me a message about Discord today. Yes, I am in there occasionally. And he says, also, Silverfest is video coming along good. All right, Silverfest, keep an eye on precious metals. I'm hearing rumblings on Twitter that the premiums are spiking and that inventory is getting lower and lower and lower in the bullion space. So watch out, man. Something is going on in precious metal markets right now. I don't know what it is. Prepper Intelligence, that's another great name. Thank you, Prepper Intelligence.
I saw American Eagle premium at 97%.
97% premium. That's over spot. So you're talking, if you buy that, you're 50% haircut just for the wow. It's a great time to be a bullion dealer, huh? I mean, that's their profit margins are exploding higher. And you're going to see that. That is the price of the actual metal diverting from the paper price. That's reality setting in the silver market. So I just hope I'm around to see it. One day the COMEX is going to break, and man, I can't wait. I can't wait. And Prepper Intelligence says, how dare you? I'm using my Greta voice now. How dare you? You've stolen my dreams. How dare you accuse the overlords of abusing power and destroying our currency? I know, Prepper Intelligence. I'm sorry. I can change. I'll change my wicked ways. I swear. It says, LOL, going live tonight with a buddy to talk about gold, silver, and preparing for hard times. That's awesome, Prepper Intelligence. If you have a link to that live stream, if it's up yet, throw it in the comments, man, and we will draw some attention to it. If not, post a link to your live stream down in the comments below when this one is over, and I'll pin it, And hopefully we can get some people on your live stream. Good luck with that, sir. And I'm looking forward to that one. And thank you very much for the support of the channel. I appreciate that. And guys, I can't even keep up with you tonight. This is a little nutty. Zarkos, please tell us about $6 billion the Fed sent today to Switzerland. Something, I think you're saying? Something is boiling hot there. All right, Zarkos, I will, since you asked. I did have it queued up. I mean, it's small on the screen right now, but I'm sure you guys can see this. So let's just go ahead and do it before we go through the indexes. Let's talk about Switzerland. First, we got to go through a timeline of events here, okay? So this is today at 1:02 p.m., and this story is hilarious. The timeline is great. Credit Suisse chairman pledges reform after a horrible year. All right? Credit Suisse's chairman, whose name is Lehman, by the way. Optics are important, folks. He pledged on Friday to reform the bank after a horrible 2021 in which it lost billions of dollars. We had last year a horrible year. You don't say, Mr. Lehman. We had the biggest loss in the 166 years of the company, said Axel Lehman. We are fully aware that we need to change, and we will change, clearly. Well, I'm glad it only took you a couple of $1 billion worth of scandals to reach that epiphany. Thank you. The next time you need to make a revelation, maybe don't make it so expensive for your customers. Lehman took over in January at the Swiss bank, which had been hit by corporate spying scandals, investment fund closures, heavy losses, and a string of lawsuits. On Friday, he defended the group, which he said was the focus of much speculation by journalists and others, saying the bank's capital base was strong. Uh-oh. Big red flag right there. When you see a bank CEO come out and tell you that his bank's capital base is strong, that's how you know it isn't. The last time a guy named Lehman said his capital base was strong, things went really well, right? Actually, the CEO of Lehman Brothers back then, he wasn't actually named Lehman, but you get the point. These jokes write themselves, folks. Thanks, I'll be here all week. This year, we are not generating capital because we're not making profit, you don't say. And he said this at an event organized by a global banking body. All right, so important thing here. At 1:02 p.m., he says the capital base is strong. And the reason I mention that is check this out. This is what Mr. Zarkos was referring to, asking about the $6 billion the Fed sent. These are central bank liquidity swap operations. So that's a mouthful. That is basically the Fed sending emergency dollars over to some other central bank. All right, I'm just going to read you the definition of this. These swap facilities are designed to improve liquidity conditions in global money markets and to minimize the risks that strain abroad could spread to U.S. markets. All right, so this is done under the auspices of preventing contagion from European banks to our banks by providing foreign central banks with the capacity to deliver U.S. dollar funding to institutions in their jurisdictions. All right, so the object is to eliminate risk to U.S. banks from overseas banks by giving overseas central banks dollars to bail out their banks, their country's institutions. All right, the results of the central bank liquidity swap operations and small value exercises of the central bank liquidity swap lines are published on a weekly basis. All right, so that's the definition. And you can see down here at the bottom of this image, I can't really zoom in, but on October 12th and settled yesterday, October 13th, there was $6.27 billion of emergency dollar liquidity swaps were sent from the Federal Reserve to the Swiss National Bank. Now, gee, folks, let's think outside the box here for a minute. Who in Switzerland might need an emergency liquidity injection of $6.3 billion in the middle of the night? Only two big banks in Switzerland, and one of them is Credit Suisse. The other one is UBS, who has not been out there repeatedly assuring us how strong his capital base was. Maybe the reason why Mr. Lehman is out there today saying the capital base is strong is because the Federal Reserve just gave him $6.3 billion. I just throw them out there. You do what you want with them. All right. So there's the $6.3 billion that Zarkos is talking about. It's basically a bailout of Credit Suisse from the Fed. That's great. Now we're in the business of bailing out European banks. And then I saw this one on Zero Hedge today. Credit Suisse is said to prefer not to do capital raising. Now, this is at 2:23 p.m. This is a few hours after he said the capital base was strong, which was a few hours after he got the $6.3 billion bailout from the Fed. Now he's out saying, we prefer not to raise capital. Now, raise capital means issue shares or sell bonds or spin off parts of our business, right? Raising capital is something you do when you're desperate. And, well, at 2:23, he said, we prefer not to do that. Remember the timestamp here, 2:23 p.m. At 2:25 p.m., we got this one. Credit Suisse talks to underwriters as it mulls capital options. Panic time. 2 minutes after they said they prefer not to raise capital, the story breaks that they're talking to underwriters to raise capital. So this is a very rapidly evolving, developing, cascading, collapsing, burning, however you want to describe it, situation over at Credit Suisse. Yesterday, they got a $6.3 billion bailout from the Federal Reserve through the Swiss National Bank with these credit swap lines. Today, they come out and say their capital base is strong. 2 hours later, they say they prefer not to raise capital. And 2 minutes after that, they're trying to raise capital. So what on earth is going on at Credit Suisse? And that is why we got the thumbnail today. I know that was Christine Lagarde, Credit Suisse. There's not part of the European Central Bank, but it's part of this European fiasco that is going on there. That is the story of Credit Suisse, Zarkos. And that is the sequence of events around this $6 billion swap line, bailout, not bailout, QE, not pivot, whatever you want to call it, that the U.S. just provided emergency dollars to Credit Suisse. So I don't know what's going on over there, but thank you very much, Zarkos. I appreciate the support of the channel. And this is a fast developing story, folks. So I don't know, by the time this stream is done, I really don't know what this might look like. And I've got my good friend Mike Binder from Robin RC Models. Howdy, Mike. Thank you, sir, for the support of the channel as always. He says, do you like horror movies? I like them occasionally. I like old horror movies. I don't like the Saw movies, you know, like that are just like gore fest. I don't like them. I like a decent like monster flick or slasher flick. They're entertaining. They have their moments. Just watch stock prices, FX, and bonds. They are horror stories. He says nightmares are made of this. Plus, Treasury wants to take bond burden off the banks. And I noticed you said bond burden as if they're printing. You know, that's a pretty good segue there too, Mike. Let's talk about that one real quick because, well, we got this story today from the U.S. Treasury. Where are we? We're a little out of order here. U.S. Treasury asked major banks if it should buy back U.S. government bonds. So the Treasury, which, remember, the Treasury operates at a loss. We run huge deficits in the United States, and we fund those deficits by selling Treasury bonds. So now the Treasury has the money, and they're asking the bond market, hey, we have this money. Would you like us to buy back those bonds to restore liquidity? I don't write this stuff, folks. I just report what I see. That is what Janet Yellen is talking about. And like I said several times today, when you hire a central banker to run your Treasury, don't be surprised if you end up with a central banker running your Treasury. That's how they run central banks. They're going to run the Treasury the same way. The U.S. Treasury Department is asking primary dealers of U.S. Treasuries whether the government should buy back U.S. government bonds in order to improve liquidity in the $24 trillion market. Investors are worried about reduced liquidity in Treasuries as yields rise and volatility increases in line with rapid rate increases by the Federal Reserve, which is struggling to bring down inflation that is running at its highest levels in 4 decades. Now, there was a really good thread by the Last Bear Standing on Twitter about this, and I've had this guy on the channel before. He's fantastic. His Substack is really, really underrated, guys. The Last Bear Standing at TLBS, separated by underscores on Twitter, or check out his Substack. Highly recommend it. But he came out with this thread. I'm going to read it to you now. Thank you, Last Bear Standing, for this. He says, on Treasury buybacks, this is a whack-a-mole policy. If the Treasury was to issue bills and buy back long-dated bonds, and the bill issuance drew money out of the reverse repo, it would be liquidity enhancing. So I'm trying to get my head around this situation. They would be basically issuing short-dated debt, increasing the supply of like 1-month Treasury bills, 3-month Treasury bills. That would drive down the price of those bills, and it would drive the yields higher on those. And then they'd use that money to buy the long-term U.S. bonds to restore liquidity in the bond market, to restore liquidity in the 10-year, in the 20-year, in the 30-year. All right. Now, the theory is that would drive up the rates in the short-term Treasury bills, and some of that money from the reverse repos that's sitting on Mars would then come in and start buying those Treasury bills, which would be yielding a higher interest rate. So this is about using the Treasury to manipulate the yield curve, to intentionally steepen the already inverted yield curve to try to get that reverse repo money back into the bond market to restore liquidity. Look, when you mess with markets that much, you're going to cause some other problems. So this is a desperate move by the Treasury. This is what the Treasury is talking about doing here is contrary to what the Fed is doing. Look, I don't write it, folks. I don't know what the heck they're trying to do. God forbid we just step back and we let the markets figure out what the fair value of these bonds is, right? God forbid we do that. No, not when we can just inject ourselves and cause all kinds of other problems. So there you go, Mike. That's, Last Bear Standing put it as good as I did. There's a couple of other tweets in this thread. I'm not going to go through the whole thing right now at this moment, but I recommend you guys check out Last Bear Standing. He is a really sharp guy and a lot of good knowledge over there. He's one of the few undiscovered gems on Twitter, although he's got a pretty big following now. I don't know if we could call him undiscovered. But thank you very much, Mike. Appreciate the support of the channel, as always, sir. And I've got Timothy Cook. Where have I heard that name before? Tim Cook. He was the CEO of something. I can't remember. I've heard that name before. Anyways, hello, Tim Cook. Oh, Apple, right? Yeah, I'm sure we have Apple CEO Tim Cook. That's who we have here. Yeah, I'm sure we have the CEO of Apple is here. Well, thank you, Mr. CEO, for being here. I love your phones. He says, you see 8.7% COLA for Social Security. That's big. That's the biggest in history. COLA, cost of living adjustment, in case you didn't know that. The boomers are rating the younger generations one last time. I can't really say that that is the boomers rating. It's certainly to the benefit of the boomers, but let's be honest, inflation is a hell of a lot more than 8.7%. I don't care what CPI says. Actual rate of inflation is closer to 20%. Also, the boomers, probably most of your tax base, so Social Security, well, it doesn't really matter. Social Security is funded by debt spending. So yeah, you're right. This is a transfer of wealth from future generations to the boomers. It is. Predicted this in my book, The Plight, the generations battle facing millennials and Zoomers. Okay, I have not read that one, but that's interesting. The generational battle facing millennials and Zoomers. Look, hard times breed strong character and durable people. Strong character and durable people breeds good times and pleasant times. And good, pleasant times and abundance, that breeds weak people and decadence. And lethargy and weak, decadent, lethargic people breeds hard times, and the pendulum swings back. And, I know millennials and Gen Z gets a bad rap from the intergenerational back and forth, but to be honest with you, with what is coming, God forbid things get as bad as I'm afraid they do get, or they could get, then Gen Z may go down in history as one of the toughest generations ever by necessity, because they'll have to be to survive. So let's not rag on the Gen Zers and the millennials just yet, folks, because their best days could be ahead of them, and the worst, depending on how you look at it. But the greatest generation that defeated fascism in World War II, those were the hardest times imaginable. And out of that came the prosperity of the following decades. And then, the baby boomers were the primary beneficiaries of that, and then the Gen Xers to a lesser extent. And now things are swinging a little bit too far in the other direction, and hard times are back. So it's circular, and I don't really know any way out of that cycle. But thank you, Tim Cook, for the support of the channel, sir. I appreciate that very much. And did I get everybody? Did I? I did not. There is only one way. It says, if you want to see a rug pull, keep your eye on the UK rain country. I don't know if you're even allowed to say that anymore. People are getting demonetized over what's going on in Europe right now. So I'm not sure I can even say, yeah, I've said Ukraine enough times. It's not like I'm going to stop now. They're either going to demonetize me or they're not for it. 70 billion so far. Is that the total of the military aid that we've sent over there? It's interesting because it seems like every day another billion, another few hundred million. And look, I don't want to bring the trolls out of the woodwork here. There's trolls on both sides of this issue. Suffice it to say, I had a long conversation with a good friend of mine today about how the world just seems like it's on a one-way track, on autopilot into World War III. And somebody needs to come to their senses first. I don't care if it's somebody on that side or one of us here in the middle. Somebody needs to come to their senses and stop this before it gets too bad. And, I heard somebody make the comparison between the oil embargo against the Japanese before World War II, before the U.S. joined World War II, and this chips embargo that we just put on China that last few weeks, right? In World War II, we put an oil embargo on Japan because of the Japanese invasions of China and other parts of the world. And that forced Japan, they were left with only one option, to capture oil fields in the South Pacific around Indonesia, right? Well, there was two big obstacles to their capture of those oil fields, namely the British and American fleets in the Pacific. So the Japanese decided that their only option would be to eliminate the British and American fleets in one quick sneak attack. And they were very close to successful in doing that. If they had got our aircraft carriers at Pearl Harbor, they would have accomplished just that. So you could argue that the U.S. forced the Japanese to attack us with that oil embargo. And the reason I mention that is because we just put this chips embargo on China. Basically says any of these chips companies that do business with the U.S. are not allowed to do business with China. Well, 1/3 of the world's chips, which everybody needs, are manufactured in Taiwan, and China already has their sights on Taiwan. And we just said Taiwan Semiconductor, one of the biggest manufacturers of chips in the world, you're not allowed to do business with China anymore. So we just gave China another reason, very similar to the reason we gave the Japanese to attack us in Pearl Harbor. Seems like we're repeating the mistakes of history right now. It really does. Somebody on one side or the other needs to settle this stuff down. I don't know how you do it, but figure it out. Figure it out before it's too late, folks. Anyways, I'm going to get off my soapbox now. Thank you. There is only one way. I appreciate the support of the channel, sir, very much. And let me say the name right. Evgeny Zilis? Did I say that right? Evgeny, can I call you Easy? Easy, thank you very much. Just in ECB's Nagel, we are in a very difficult situation. Wow. The ECB says we're in a very difficult situation. I'm so glad you're here to tell us these things, ECB's Nagel. Chewy, take the professor in the back and plug him into the hyperdrive. Next thing you'll be telling us that this asteroid is not entirely stable. Captain Obvious. Yeah, this is hardly breaking news, Easy, but thank you very much for the support of the channel. I appreciate that very much. Yes, Europe is in a very difficult situation. Mildly put, they're going to have to, Europe has already decided. Europe is going to bail out their banks. Europe is going to print. They're going to pivot. I mentioned it in my video yesterday that everything that had happened yesterday, one possible explanation was this weak sauce report from the ECB that they were considering only raising to 2%. And how, oh yeah, we think we can get inflation from 10% back down to 2% with another 150 basis points of raises. Yeah, right. It just doesn't work that way. So that might have been one explanation for what happened yesterday. Anyways, Easy, Evgeny, I apologize if I butchered your name, sir. Thank you very much for the support of the channel and for the super chat and for that breaking news. That's a big surprise there. What's going on? Zarkos is back again. He says, I'm ready to bet that the French bank, oh boy, are you going to make me use my my non-regional diction? I hope I don't put the emphasis on the wrong syllable. He says, can I just say Société Générale? Société Générale. Don't make me use a fake French accent. It will be so pretentious and so awful. Probably hilarious at my expense. But this bank is in big trouble too. It's a silly bank. Always losing money everywhere it's possible. Mark my words. All right, Zarkos. 1 million melon points on the line. If it is Société Générale that fails next, then you get 1 million melon points. Melon points are redeemable for absolutely nothing and entirely worthless, but 1 million melon points on the line. And it is a silly bank, like Camelot is a silly place. Moving on. I heard somebody just commented not too long ago that they still think Deutsche Bank will be the first one to go. And Deutsche Bank is a fine candidate because they are one of the most over-levered banks in Europe. But right now, it really looks like Credit Suisse is going to be the one that goes first. I might be wrong about that, but we will see. And thank you again, Zarkos. Appreciate the super chat, sir, and the support of the channel. And I have got YouTuber. Thank you, YouTuber. Money goes where knowledge flows. Look at PZEN. I am not familiar with that, but ask and ye shall receive, YouTuber. Let's see what's going on with PZEN. This is Zena Investment. No, that's PZN. PZEN. Where is it? It doesn't even show up here. Let's see if investing.com has it. Well, Yahoo Finance won't even quote it. I don't see PZEN. I see this Zena PZN. I am unable to find this ticker. It's possible this one doesn't trade in the States, or if it does, it trades at a different ticker. I am sorry, YouTuber. Do me a favor, Mish, keep an eye out for this one. If you see it from YouTuber, see if there's another ticker that this one trades under in the States, because it doesn't come up on any of the apps that I use when I look that one up. But if you figure out what that ticker is here in the States, I'll look it up. But thank you very much, YouTuber. I appreciate the super chat, sir, and the support of the channel. Crushing Bears in the house. What's up, Crushing? He says, should I hold some VIX for the weekend? Puts on HSBC. You know, I'm looking at the VIX. It puts on HSBC, not a terrible bet. All right. Again, not a financial advisor, not financial advice. All that covering CYMIA stuff. Puts on the banks right now are probably not a terrible bet. The banks, especially the European banks, probably not really in that good a shape. And plus, HSBC has a lot of exposure to the Chinese property market also. So HSBC puts is a way to play the carnage in Europe and the carnage in China with one trade. So that's not a bad idea. Now, what was the other part of your comment? Let me see here. Should I hold some VIX over the weekend? Okay. I currently don't hold any VIX. No immediate plans to hold any VIX. But I can tell you 36 is the level to watch in the VIX. All right. And if we just go back a year, and let me make this a full screen chart. If you go back about a year in the VIX, geez, why is this so? I got to zoom out a little bit. Full screen it. All right. The 36 is pretty much the level where the VIX stalls every time. And somebody put this out on Twitter earlier today. I can't remember who it was, so I can't cite them. But typically, bear markets don't find a bottom until the VIX is well above 40. 45, I believe, was the level mentioned. And we don't really get into that panic mode until the VIX breaks above 36. All right, so if I was going to do a VIX trade, one of the things I'm watching is I want to see us close above 36. And at that point, I might initiate a VIX trade. I know that's kind of a high point, but I'd be looking to get in around 36 and get out around 45. All right. And I don't know if I'm going to make that trade. Again, not a financial advisor, not financial advice. Those are just the levels I see as kind of like, okay, when this sell-off really hits full-blown panic mode, liquidity crunch mode, the VIX has to be above 36. That's when you know the rapid fall is finally here. And then 45 is where you might want to start thinking about taking profits at something like that. And look, if we go all the way back, you're looking at the VIX went as high as 80 during the COVID sell-off. So trading the VIX is tough. Let's just put it that way. It's a hard trade. And these are risky instruments, folks, and there's a lot of complex math that goes into the VIX. So just be careful with that one. That's all. Don't go out on leverage. Watch your expiration dates. Don't try to trade anything too close to expiration because, look, we had an inexplicable 1,400-point intraday swing yesterday. That could come up at any moment again. So thank you, Crushing Bear. Appreciate the support of the channel. And I also have to say hello to, where are you, M&J? Oh, not yet. We got Mike Binder again. Thank you, Mike, for your support of the channel. From Robinarshi Models, he says, German Green Party wants to introduce a bill similar to post-World War II burden equalization. I'm not familiar with that term, burden equalization. Government takes a 30% mortgage on your real estate and you pay it back. So is this kind of like you co-sign with the government when you buy a house? Is that what they're talking about? I've heard something similar proposed in the UK. I'll be honest with you. I don't want the government anywhere in my mortgage, anywhere in my home. I don't want their permission. I don't want their input. I don't want their ideas. Nothing. The more distance between me and the government, the better. Sorry. That's just how I feel about it. Nothing good comes out of the government getting their filthy fingers into the pies of my mortgage. So I'm not surprised that the German Greens would introduce that because Greens hate the concept of private party. The Greens are borderline socialists and they want the government to own everything and then grant us an allowance for our life. So that's a very green thing to do. And if the greens be for it, it can't be good for you, folks. So I'm just going to throw that out there. I'm not a big fan of the greens, in case you hadn't noticed there. Thank you very much, Mike. Appreciate the support of the channel, sir. And M&J. Hello, M&J. Thank you very much for the support of the channel. It says, Mish is trying to tell you he's backstage. He found a stock ticker. Hey, Mish, I brought you back in there. I didn't realize you left.
No, it's my internet here is kind of spotty, so I got kicked out. I didn't think M&J would just do one just for that. I thought someone would tack it on the end. So thanks, M&J. Yeah, I found this ticker for you. It's the crypto coin.
Oh, it's a crypto. Uh-oh.
Private
All right,
chat.
well, you know what? He asked me to look at it, so I am going to look at it. And sorry, Mish, I didn't even realize you got booted there. I just start running my mouth, and, that's... Okay, let me...
See, I would have tried to say Societe Generale.
Societe Generale?
Yeah, but it comes out more Latin than it does French.
Yeah. I'm not even going to try it. All right, what is this? Please Zen, P-Zen. All right. Look, P-Zen, you were asking me about it, YouTuber. I know nothing about this coin. I can't say if it's a good project or if it's a bad project because I know nothing about this coin. But all I can tell you is I look at what it's worth, 0.0006. What? Not touching it. Sorry. Don't do altcoins. Right now, I don't even like Ethereum now. Not after the merge. So I can't get behind that one. I don't want to insult anybody's pet project. I know nothing about it, so maybe these projects have their merits. All I can tell you is in the altcoin space, there are hundreds, thousands of these things, and 999 out of 1,000 of them are worthless garbage. And I'm not good enough to spot the 1 in 1,000 that isn't worthless garbage. It's a lot like the dot-coms right now, the similarities between the dot-com bull and the crypto bull. So for me, for the time being, I'm sticking to Bitcoin and nothing else. And even Bitcoin, there's probably more red days ahead than green in the short term. So I'm even being cautious about Bitcoin. But I do continue to dollar cost average into Bitcoin. I buy a little bit every week. I use an app called Swan that's on autopilot. There's an affiliate link down in the description below. I'll always let you know when I use affiliate links. That's my crypto exposure. That's 10 years plus, super long-term horizon. Altcoins, I just don't get involved there. There's too many landmines to step on in that place.
I think if you're going to go into extreme risk, I like junior miners. That's my personal extreme risk.
Yeah, that's pretty well said. And, I'd mention even junior miners, like that's a risky one right now because you've got rising energy costs, you've got rising borrowing costs, right? And that's your two biggest inputs for the junior miners right there is energy and access to funding. So that is a risky space right now. But at the same time, the inventories in precious metals getting so low, we could be on the brink of a blowout in precious metal prices, and the junior miners will just absolutely rocket when that happens. But there could be, again, much like crypto, there could be more red days ahead in the short term than green days because I just think this market-wide sell-off, this liquidity trap, is going to drag everything down with it, even the good with the bad. And, that's why I'm liking cash right now. I'm still very cash heavy because I still think any asset or most assets I could buy right now are going to be cheaper a month from now. So I'm still sitting in cash, eating the cost of inflation. It sucks, but it strikes me as the safest place to be right now. M&J, thank you so much for reminding me that Mish was backstage. Mish, I'm sorry I left you backstage like that. But that's great. Do I have good...
There's only one or two rants I tried to stop, and I was like, crap.
I did see the text come through. I did get a text that said I'm backstage, but I always get that text from you right before we go live. I just figured it was like a late delivery because I knew I had already let you in one time. Anyway, sorry about that. And M&J, thank you very much for modding, for everything you do for the channel, and now for that very well-timed message there. I appreciate that very much. And my man, AK is back, says gold is doing its job well in New Zealand as our money is now 56 cents to the USD. Wow. Yeah, the USD is just on a tear right now. It is the wrecking ball of currencies. It's causing havoc all over the world. And, I know a lot of the holders of other currencies are not happy right now. And I don't think this is good for the dollar in the long run. I think this is going to speed up the decline of the dollar as the world's reserve currency. I did a video a few months ago about how the strong dollar will kill the dollar because by necessity, other countries are going to be forced to start figuring out other ways to buy international commodities. Oil and food and everything can't be traded in dollars if nobody can afford dollars. So there's a dollar shortage right now. See also 6.3 billion in swap lines to the Bank of New Zealand or the Swiss National Bank. Right? That's because there's a dollar shortage, this liquidity squeeze, and it's hurting banks. It's hurting people trying to buy commodities. It's certainly causing havoc in Sri Lanka where they can't afford food or fuel. So I feel for you guys. This currency squeeze, it's not good. But thank you very much, AK. I appreciate that. And yeah, gold, base of Exeter's pyramid. I know gold prices are low too right now, and I think gold prices are still heading lower. But if it ever came down to like a full-on deflationary collapse where debt is going bad, you're going to have this stampede down Exeter's pyramid from the derivatives, from the stocks and the bonds, all the way down into gold. And by then, you won't be able to find gold anywhere. It'll be possession is 9/10 of the law. And I have got Cormac Kilroy. Thank you, Cormac. He says, Jack, 6-hour work for a 15-minute video. Thank you for all you do for us. 6 hours on a good day, Cormac. I'm not going to lie. Yeah, folks, it does. It takes a lot of work to put out a 15-minute video. You got a couple hours of research and planning, and then you actually have to film it. And for 15 minutes of video, there's usually like 40 minutes of raw footage that I have to cut out and crop up, or I said something wrong, or I stuttered. And, so I go in and then I spend a few hours editing it. And then you got to type up a description. You got to put tags and titles. You got to make a thumbnail. Then you have to put it out there. You have to answer comments. It really is. It's for a 15-minute video, it's 6 to 10 hours of work. So I've been putting in long days. I've been putting in pretty long days on the channel lately. So thank you very much. It feels good to be recognized for it. Thank you very much, Cormac. It really is a lot of work, but I love doing it. Let me just say that. It doesn't feel like work. I love doing it. So I'm going to do this forever. Forever and ever and ever. Thank you very much, sir, for the support of the channel and for your kind words.
You and I spend like 3 hours a day on the phone.
Yeah. Yeah, me and Mish spend a lot of time. Did you see the Dixie? Did you see the yen? Did you see the pound? This is happening. Oh, this national bank said this, and this central bank said that.
Let's see what this idiot said.
It's what?
Yeah, it's like, did you see this idiot, what he said? And yeah, it's 3 times.
Yeah, it's like this mosaic. You kind of we put together the picture of what's happening in the world because we both scour social media and scour the newsreels and look at the charts. And when you compare thoughts for a couple hours on the phone, eventually you get a picture of what's going on in the world. All right, I think we got a video here. I'm going to go put one together and start shooting that. So it's good. I don't know how channels that don't have a Mish, I don't know how they do it because there's just too much information to consume for one guy. It really is. Now I know why newsrooms have like entire teams of producers scouring the world because it's tough to keep up with it, man. It really is. All right, we are just 2 minutes away from close. The day is going fast right now. Let's take a look at what the indexes are doing here. Right now, the S&P is...
I don't think we've looked at the indexes yet.
Yeah, well, I know. We haven't. You guys with your super chats, man. They've been rolling in today. Can't keep up with you guys. I got to get faster here. All right. S&P 500 down 89 points, 2.42%. All right, we gave up almost all of what we got back yesterday. Let me look at a 1-week chart. Pretty much right where we closed on Wednesday. So, I mean, we didn't go all the way back down to where we opened yesterday. But wow, they gave back all those gains in the S&P 500. That is crazy. The Dow down 383 points. Only gave up about half of their gains from yesterday. So the Dow is still looking in better shape, but still down 1.28% after yesterday's rally. And the NASDAQ is down 3.15%. The NASDAQ now lower than they closed on Wednesday. Still above the lows from yesterday, but it looks like selling off into close too. I just saw another little gap down in the last minute of trading here. Wow. Now down 10,311. Bad day for the NASDAQ. And real quick, let's look at a NASDAQ chart here. I have this one up. This is this resistance level that I've been watching here. And those are ugly candles back to back right there. You see a big red right after a big green. Not quite a bearish engulfing. We'd have to close a lot lower than that. But not good looking. Not a good looking chart right there. We spent a little bit of time above this support line, which I guess is now a resistance line. And again, look out below, folks. Let me real quick. I want to draw that Fibonacci retracement that they mentioned in the It was in the Bloomberg article because maybe we can get a little bit. I know some people aren't crazy about Fibonacci's. All right, some people think TA is voodoo. All right, it's not. It's not voodoo. This is a visual, graphical representation of human psychology, folks. And these trends do play out. They're not perfect, but they do play out. And you know what? I drew it backwards. Let me get rid of it. We got to start at the top, and we got to go to the bottom. Nope. Did it again. Amateur hour TA is what that is, folks. Sorry about that. So, right about, we're actually right around the 61 line here. Yikes. Got a long way down on the NASDAQ, folks, if we break from here. Next support level I'm seeing if we go below this is that 2020 low from March of 2020. The Bill Ackman bottom, if you will. So, look, it's going to be a long weekend, right? It's only a 2-day weekend, but at this rate, with the rate things were developing with Credit Suisse today, and with the end of this Bank of England bailout, by Monday morning, who knows what's going on, right? Liquidity crisis, the saying I keep repeating, you have decades where nothing happens, and then you have minutes where decades happen, all right? And just based on the chatter that I'm seeing and how nervous I am and the intensity of what these people are saying in their interviews, and then CEOs coming out and reassuring us of their capital base and how strong it is, it just reeks of 2008. It just reeks of it, folks. So you can't blink. If you blink, you'll miss something right now. I don't know how else to describe it, but it's an interesting time. These days aren't always fun, folks, but they're never dull. I can tell you that. I have Cormac Kilroy again. What's up, Mish?
Anne Murray.
Anne Murray?
Anne Murray.
Anne Marie, was she the one who came up with that quote?
Nope. Read the next statement.
Read the next statement.
The one that's up. Yeah.
All right. From Cormac Kilroy. Thank you, Cormac. He says, Jack, my wife loves your channel. It's her birthday today. Be a treat for you to wish her a greet. Thanks, brother. And you're saying the name is Anne Marie, Mish?
I am.
Okay. Well, I have to say it. Anne Marie Kilroy, Mrs. Kilroy, happy birthday very much. Thank you for watching the channel. That is awesome. And thank you, Cormac. You guys are awesome. And those look like euros. So I wish you guys the best. I hope things over there go well over the next few days. We are praying for you guys. Well, sometimes keeping warm can be fun. That's all I'm going to tell you guys. All right. If it's a cold winter, have fun staying warm. I'm just looking for the silver lining here, folks. I like silver. Right. I got my little generic round that I keep right next to the camera here. There's a lining to every gray cloud, and maybe you guys are going to have a lot of fun keeping warm this winter. Doing the best I can here with the hand I'm dealt. But happy birthday, Anne Marie.
Mom and Dad.
And I forgot Mom and Dad too. Again, I didn't say hi, Mom. Hi, Dad. I love you guys. Oh man, I'm gonna have some explaining to do when I talk to Mom after this one. I'm supposed to say that in the opening every time. It's hard, Mom. Banks are failing. You know, can you cut me a little bit of slack? We got like the Swiss National Bank. I mean, we're on high alert here, Ma. Love you guys. And happy birthday again, Anne Marie. Thank you very much for watching the channel. Thank you for the kind words, Cormac, and the support of the channel. That's awesome. Is it Cormac or Cormac? I'm sure I'm mispronouncing the names. Sorry, you guys. And my man, Mark the Stump Grinder. What's going on, Mark? Long time no see. I hope you're doing well, brother. Mark, nothing to say, just a very generous support of the channel. Thank you very much, Mark. I appreciate that very much. Mark is a good guy. I get emails from him all the time. Hope things are going well for you, sir, in the tree business. And thanks again. And I got Tim Duffy. Thank you, Tim, for your support of the channel. He says, could the Fed's soft landing? I just want to say no before I even read the rest of the question, but I'm going to keep going. Could the Fed's soft landing actually happen if they're buying the dips behind the curtain? No. No, they can't, Tim. I don't know enough about the mechanics of what the Fed is doing and the plunge protection team and everything Yellen is trying to do with the short-term treasuries. All right. I don't know enough about the specific actions being taken to say this action will have this result to this extent with this magnitude for this long. Right? I can't tell you that, but I can tell you interventionist policy in a machine as large and complex with as many moving parts as something like the U.S. economy or the global economy. You can't mess with one parameter without causing a corresponding reaction in all the other parameters. And the more they start messing with more parameters and more frequency, then the necessity of messing with it even more gets even larger. The more you intervene, the more you have to intervene. And then the reactions become bigger and bigger and bigger. And the next thing you know, you're just sitting here intervening 10 times a day in all these different things until you break something. And that is inevitable, no matter how good they are at what they do, no matter how well calculated, well intentioned, if they're well intentioned at all, that they do in something so big and so complex, they're going to cause irreparable damage. Right? Think of it like an ecosystem. If you just one day you say there's too many beavers in the national park, so we're going to kill a few beavers. Right? The next thing you know, you've changed the flows of the rivers, and now the apex predators are dying off, and now the salmon migration pattern is affected. So you say, okay, well, let's just put more salmon in the river to offset that. The next thing you know, the bait fish population is shrinking, and that's having the effect on some bird species. So you decide we're going to shoot a few eagles to eliminate the predators of these smaller birds. More and more and more, you start intervening until the next thing you know, there's just nothing left. And you've just broken the whole system. And now you've got like mass die-offs and extinctions going on.
Birds taste like shit.
What was that about the birds again?
I said, I'm pretty sure predatory birds taste like crap.
I've never eaten a predatory bird. No, but yeah, I'm going to say they probably don't taste very good either. But, so no, I have 0% confidence, Tim, that the Fed can engineer a soft landing. 0% confidence. There is no chance they pull this off. You cannot end 50 years of a debt bubble without pain. You can't as Joe Brown says a lot on Heresy Financial, you can't eliminate risk. You can only move it around, transfer it. You can try to spread it around evenly. You can try to concentrate it among one subset of the population like they've been doing for 50 years. But, we're at the point now where we've got tens of trillions of dollars in debt. We've got banks on the brink of failure. We have thousands, maybe hundreds of thousands of people living in tent cities around the country here in the States. Hoovervilles are back. Remember Hoovervilles? Well, nobody remembers it. It was a long time ago. I wasn't even alive, but I've read about them. That's where we're at. History's repeating itself. And there's no easy way out of that much pain. Right? Like this conversation I was having earlier today. We have this overinflated housing market, right? Where people's houses are just worth so much that people can't afford the payments anymore. And we have hundreds of thousands of people living in tent cities, right? Well, you could crash the housing market, which would wipe out people who bought houses in the last few years, leave them deeply underwater, foreclosing on their mortgage. Now home values have plummeted and mortgage-backed securities are failing and the debt market is plummeting. Well, that's awful for the banking system. Well, now these people that live in tent cities actually have a chance of getting affordable housing. So you've moved the risk around. You've taken the risk from the people who are living destitute, impoverished lives, and you've transferred some of that risk over to the people who were sitting in multi-million-dollar McMansions with huge-ass mortgages that are now underwater. And I probably just got my channel in trouble for profanity. Sorry about that. But there's no way to intervene without causing problems in one place or another. There's no painless way out of this. It's just a matter of who gets the pain and how much. Right now, everybody is the answer. Everybody gets a lot. That's the overly simplified answer. Thank you, Tim Duffy. I really appreciate the support of the channel, sir. And I wish I could be more optimistic and say, yeah, the Fed can pull this off. I wish I could say that. Unfortunately, I just can't, guys. They've caused too many problems in the past by trying to fix this. And Nitro Burp. I just saw this one. I got to throw that up. Poo-poo language in front of your parents. I know. I am the worst, Nitro Burp. I'm laughing at both your icon there, your name, and the words. That was great. Thank you very much. Sorry, Mom. Sorry I cussed. I know. I'll wash out my mouth with soap. All right, guys. The markets are closed. Let's see what we got here. Dow ended up closing down 81.6 at 35.88, down 2.2%. The Dow closed down 400 points. Was it at the low of the day? You're all just barely above the low of the day, down 1.34%. The NASDAQ did close at the low of the day, minus 327 points, or down 3.08%, now at 10,321. All right. We talked about the Credit Suisse thing. I have to mention this one also, the Bank of England. All right. And shout out to Mish. Thank you, Mish, for sending me this story. He found this one today. The Bank of England, today was the last day of their bond buying. All right. I did a video a couple of days ago. It was, I guess, a couple of weeks ago now. After the UK pension funds almost collapsed, it was the icon, not the icon, the thumbnail said guilt trip on it. It was all about how the rise in yields in the UK 10-year gilts, which is like their 10-year Treasury, that was causing these interest rate swap instruments to go deeply negative for the UK's pensions, and it was resulting in this feedback loop that was bankrupting the UK pension system. They were hours away from failure, apparently, hours away on September 28th. And, you know, not to overuse the phrase Lehman moment, but a lot of people were saying it was a Lehman moment in the UK. So the Bank of England had to step in, and they started buying these 10-year gilts, these 10-year bonds from their government. And they were buying, I think, 5 billion pounds a day. And then earlier this week, they expanded it to 10 billion pounds a day. And then a day later, they expanded it to include these indexed 10-year gilts, which is like Treasury inflation-protected securities here in the U.S., basically inflation-protected bonds. So they were expanding this program. And then on Wednesday, the head of the Bank of England said, you guys have until Friday, UK pension funds. You've got 3 days to sort this mess out, and then we're done. No more support after that. And today, their last day, they bought 19.3 billion pounds worth of bonds in their last day of support. They bought more than they have bought in any other day to try to set the pensions up. And now they have to stop. They said they were going to stop. Central banks can't just change their mind day in and day out. They lose credibility. It's amazing they have any left, but they have to do this now. So the interest rates on these bonds had reached highs not seen since the financial crash of 2008 due to a lack of market confidence in the UK economy. We also had Kwasi Kwarteng, the chancellor under Liz Truss. He resigned today, or he was asked to resign by the prime minister. I don't have the link in front of me, but there was this story about there's a webcam on a picture of Liz Truss and a head of lettuce at room temperature, and they're trying to see which one will last longer, Liz Truss or the head of cabbage, because a lot of people think Liz Truss will be gone very soon also, that she never had the confidence of the Labour Party, but supposedly the Tories are starting to turn on her now also. The Tories are the Conservatives in the UK. The Labour are the Liberals in the UK. So, and Liz Truss is a Tory, by the way. She's a WEF Tory, but she's a Tory. Probably just got myself in trouble again with that. Man, using all this forbidden language.
Hey, speaking of which,
go ahead.
We got a couple super chats.
Oh, dear. Oh, dear. Oh, yeah, we did. All right, let me back it up a little bit, see if I can find the one.
I think Mr. Duffy.
Mr. Duffy was the last one. And Tim Duffy says, thanks, my puts are feeling better. All right. What were you asking about, Tim? Oh, what was his question about?
Wasn't he PCEM?
Oh, the Fed's soft landing. So you've got index puts then. Okay. That's right. It was the soft landing question was Tim. Yeah, you know, I'm still holding some puts. I bought some QQQ puts a couple of weeks ago. I bought them out to January because I was worried about precisely what happened yesterday. I'm not going to sit here and tell you I predicted yesterday. I definitely did not. All right. I was in my live stream yesterday morning, and I was hypothesizing that Mission 9 might have to go live for a 1,000-point down day yesterday, and we almost closed up 1,000 points. But I also said
1,000-point up day.
Yeah, we almost went live for 1,000-point up. So I was almost off by 2,000 points yesterday. Not my best day. All right. But I also said during the live stream that I never try to trade around the CPI prints. At the time we were down 500 points, big red candle. And I mentioned, you go back and quote me on this. I mentioned, look, I don't trade around these data releases because we could just as easily see a big green candle right back up. Now, I didn't think that was going to happen. I just mentioned the possibility of it, that we've seen it before. And it ended up happening. So I still can't point to one thing and tell you what happened yesterday, that this definitively caused that big reversal. But they're going to happen, folks. The algorithms are out there, and they are trying to squeeze out the shorts, right? A lot of people are piling into puts and shorts right now. Not a financial advisor, not financial advice, right? All that stuff. But be careful on leverage and be careful with the short-term options, right? If you go out and you borrow money on margin to take out these big short bets against the index that expire a week from now, they could engineer one of these rallies like yesterday, take it up 2,000 points, you get stop lossed out, you lose all your money, and then they take their fingers off the scale and the market goes right back down. And the difference is they got your money, right? You were right about the overall direction of the market, but it doesn't matter because they triggered your stop losses and took your money, right? So be careful on margin and be careful with your expiration dates. If you're using derivatives trying to short this market, just give yourself enough time. You're sacrificing some of the potential upside. I get it. But in the long run, you'll last longer because they can wipe you out with a move like yesterday, right? If you went in and you bought index shorts that expired today at the opening bell yesterday, you are wiped out right now. Absolutely cleaned out. In one day, lost everything. So I'm glad your puts are feeling better, Tim. My puts are feeling a little better too. But again, mine, I bought them all the way out to January. I gave myself more time. Just be careful, folks. That's all. These are unpredictable, volatile markets right now. And thank you, Get Ready. I appreciate the super chat, sir. He says, when all else fails, they take you to war. Sad but true, sir. Sad but true. And it seems like we are on a crash course, like we're on autopilot to World War III. I pray that they come to their senses sooner. Someone has to. Someone has to. Whether it's our side, their side, the middle side, your side, my side, whoever. Somebody, come to your senses first. All right? We all need to eat a little crow. We all need to take a little heat, whether it be politically or in the history books, whatever. But it's not too late. It's not too late until somebody pushes the button. All right? And nobody's pushed the button yet, so we are not past that precipice. So thank you very much. Get ready for the support of the channel. I hope that is not the case, guys. But look, it very well could end up there. Anyways, the reason I was mentioning this UK story and that it's the end of the bond buying, check out the UK 10-year gilt. And that is this chart here. Let me make it a little bigger for you guys. And we'll put it on candles. Zoom in here. Let's do one-day candles. All right, because here is September 28th, right? Right here where I have the cursor. This is where we were hours away from the pensions failing. And the Bank of England stepped in, and they started buying up the gilts, and they brought the yields down. And then the yields started coming back up. And then this week, they announced they were going to step up their buying of the gilts, but that they had 2 or 3 days, right? So the yields came back down again. But look at this candle today. The yields on the 10-year gilt, even though they bought 19.3 billion pounds worth of these bonds today, buying that money bonds bids up the price. It should send the yields down. But look how much the yields rose today. Almost over 20 basis points. And almost right back up to where they were before everything broke. Right? The pensions were practically insolvent at 4.5% on the 10-year UK gilt. Now they're at 4.32, and the BOE just took away the punch bowl. So next week is going to be interesting. Watch the UK debt market next week. Watch these 10-year gilts. Watch the UK pension funds. I don't know what's going to happen. They had a couple of weeks to unwind those positions and get out. I don't know if they got out. I don't know if they just sat on their thumbs and did nothing, thinking the Bank of England would come bail them out again. Hopefully they got the warning. But the easy money has now been shut off. And here we go. I got one more here from Mr. Zarkos again. Thank you, Zarkos. Says, I don't understand why people do options. I do CFDs, and I don't care if they're a dead cat bounce. I have enough cash to avoid a margin call. Time is not my enemy, but my friend. Look, I like options, right? Options. Right now, I'm trading mostly in options because I'm staying in cash mostly. And when you trade in options, you can get price exposure without putting too much capital on the line. That's why I like options during volatile times. They're levered plays, so you can take a couple of bucks, not a huge position, right? A fraction of your overall portfolio, and you can make a levered bet. And you can capitalize on some of these moves. And hey, if you're wrong, you only lost a couple of bucks because you haven't put that much on the line. You can leave most of your capital in reserve And then when you think the bottom is in, then you buy up the shares. That's why I prefer options. And again, very carefully, very small amounts. I'm still mostly in cash because just about any assets that you can buy right now probably going to be cheaper next week, including commodities, right? I mean, the exception of oil. I think oil is probably heading higher, but look at most of the commodity space. Base metals, lumber, gold and silver, I think they're heading lower. The only thing that are going higher is probably food and probably fuel. They're the only thing that are probably going higher in the short term. And even those, you've got this strong dollar. Let me bring up the Dixie chart today. The strong dollar is putting downward pressure on the commodity space right now because most commodities are traded in dollars. So if the denominator rises, the number gets smaller. Let me bring this one up here for you. The dollar had that little bit of a dip, that technical correction that we talked about, and now it's back up. And hey, look at those candles yesterday. The dollar came back down, got all of those losses from yesterday back. All right, now sitting at 113.2. U.S. dollar is still heading higher. And look at this one-year chart. I mean, geez, just look at this line. Very strong support. This thing is moving higher, folks. Dollar is going higher. And the higher it goes, the faster it's going to be rising because all these other countries, because all these other commodities are trading in dollars, they have to sell more and more of their own currency to raise the dollars that they need to buy the natural gas, to buy the grain, to buy the corn, the wheat. So this is it's snowballing effect. And ultimately, it's going to lead to a breaking in the dollar market. Eventually, these countries, like the BRICS countries, are going to say, we're just not going to deal in dollars anymore. We can't afford it. So when that happens, all those dollars come home, and that's when the inflation story really gets interesting. So still think we're a ways away from that. That's not something that's going to happen this week. Anyways, Zarkos, I hope I answered your question about why I do options. Again, very small positions, and I'm staying mostly in cash right now because I think just about any asset class is going to get cheaper in the long run. Anyways, guys, it's 4:22 now. I have been going for more than an hour. I think we should probably call it here. I want to say thank you very much, everybody, for your super chats and your support of the channel. You guys were really awesome today. Thank you. I really appreciate that. Thank you for your time. Thank you to my Patreon supporters, guys. I appreciate everything you guys do for the channel and your ideas and your input. I will be posting the Zoom call from this week on Patreon later on today, and we'll also have the link for next Wednesday's Zoom call. We get together once a week on Patreon for a little Q&A. It's a smaller group, so looking forward to talking to you guys next week. Thank you, Mom and Dad. Sorry I didn't say hi to you guys sooner. Mish, you got anything you want to chime in?
Maybe if I'm not on mute.
You're not on mute. You're here, brother.
That's amazing that I'm not actually on mute. All right, guys.
I didn't mute you.
Hey, it was me. Y'all have a great weekend, everybody. Remember, wherever you go, there you are.
Yep. And remember, Mish, if we do actually get a Merc, someone takes you up on the Merc today, I want to see it. I want to see pictures. I want to see video. Put that out. That'll be awesome. All right, guys. Thank you very much for your time. I want you to have an awesome, awesome weekend. Keep your eyes on news coming out of Europe, folks. That is the one takeaway from this chart. There are fireworks on the horizon. All right, guys. Have a great weekend. And until next time, live small and dream big.